All right, welcome to Grant Teach Me Something. Today I'm very happy to have Mr. James Jenkins here.
What up?
Very gangster of you.
I'm so white.
All right, so in our 3 Steps to series, today we're going to talk about 3 steps to proper insurance, which is, insurance, let's not fool anybody. It's not the sexiest of topics, but it is. Let me ask you what sex appeal is. Is it, how sexy would something be after your house burned down for you to have figured out, oh, I could have had a bunch of money in my pocket right now, or I'm screwed because I went with the budget rate?
I don't know. Now, correct me if I'm wrong, but getting paid what you feel like you should get paid, when you feel like you should get paid it, that might be a little bit sexy.
That's a little bit sexy. So super happy to have this guy here. You know, he's an engineer. He knows this stuff inside and out. I really appreciate that about him. So James, tell us a little bit about yourself, and then let's just jump straight in. So
cool.
Give me a background of you.
Well, like the 30-second version for your folks. I came into the insurance world from corporate America in 2012, moved to DFW, didn't know a soul, started a scratch agency. I was with Farmers Insurance at that time, had a lot of success, was really boring, really generic, same old kind of insurance stuff. About 3 years ago, realized I'd like working with real estate investors and decided to make that a central part of my practice, so much so that it was a big reason why I left Farmers. I sold my agency and went fully independent because I got tired of losing great clients who liked me, who liked my advice, so I just didn't have the right product to meet their needs.
Right.
So here we are. Launched a brand new independent agency on March 1st, and we're just blowing and going, man.
That's awesome. And I think it's worth noting that, you know, he focuses solely and entirely on businesses and investors like you. So that's why we get to get this wealth of knowledge from him. So thank you so much for being here. All right, so our 3 steps. Give us just the 1, 2, 3, and then we're going to go dive into each one of them. What are our 3 steps to getting the right insurance for our deals?
Cool. All 3, just bam, bam, bam. The first one is knowledge is power.
Okay.
We're going to dig into that a little bit. The second one is look past the company name. The company name is not what you think it's cracked up to be. And the last one is let's dissect that dollar.
I love that. All right, so that's what we're going to be hitting today. All right, so let's jump right into knowledge is power. So tell me a little bit about that. So this is going to be one of the big trip-ups of doing insurance is that, like, I don't know about you guys, but whenever I started this business, I didn't know crap about insurance. Now I can go inside and out on the things because I've done enough deals and I've had to get insured on stuff.
Yep.
But I still don't know everything. Tell me about what that means to you. What does that mean to you? If somebody out there is looking for an insurance policy, what do they need to be knowledgeable about?
Well, the most important thing is that you stay focused on what you are best at as an investor. That's running your operation. That's finding deals, structuring deals, closing deals, how to prospect with sellers, and all of the things that you learn from creativecashflow.com, obviously. When it comes to insurance, the most important thing that you can do as far as knowledge is power is get just enough knowledge to select the right person to take care of the rest of it for you. Right. What a lot of people say, especially, and there's this inverse relationship, the more successful you are, the more you need great insurance, but the less time you have to mess with it.
That's very true. That's wisdom. If I should have gotten like a Golden Nuggets button set up here.
You know, we can't all be Propelio, right? But when it comes to knowledge is power, it really is incredibly important to vet the people that you are talking to, because if you post on Facebook, if you post on, LinkedIn or somewhere else, hey guys, I need an insurance agent. Who do you know who can help me? I guarantee you 90% of those comments are going to be, oh, I talked to so-and-so. He saved me a lot of money. And yeah, money is great. Like we're going to talk about in point 3. I don't want to get too far into that. But when that's the first thing someone says about, selecting who's going to be your advisor, do a little bit of digging.
Right.
And I know that a lot of people are really busy and they're short on time and then they're irritated to even have to think about insurance, much less do even a little bit of due diligence. A couple of quick hits. Just look at that person's Google. Pick the 2 or 3 that you want to talk to before you even talk to them. Because let's be real, they're professional salespeople. When you get on the phone with them, they're likely to fill your head with all kinds of salesy stuff and convince you that they're a great option.
Of course.
When they may not be a great option. Go to their Google page, go to their Facebook, wherever you can find information about them from a third party, and look at the content of what people say about them. Forget about the whole so-and-so saved me money. It's, were they helpful? when I needed something? Did they give me good advice? When I had a claim, did they have my back? How did the claim go when I was with that person? All of these are really important things.
Because that's what insurance is for, right? Is for when something goes wrong, right? It's all fine and good to have an insurance policy that saved you money, or to have worked with somebody and gotten a policy and not had to mess with it. But what happens when the claim occurs? You need to hear from people who have had to take a claim out. That's part of this knowledge and discovery portion. And another thing I want to throw in there, as far as the go with this person, they've saved me money. Referrals, people love giving referrals. And it's not because 90% of the time that you get a referral, I say 90% of the time, a large portion of the time that you get a referral to a professional, like a realtor or an insurance agent, is going to be from somebody who's probably not used many, if any, other professionals in that industry, but it makes them feel good to put a referral out there. It's really a pat on their own back when they give a referral, because they get to say, my opinion matters, here you go. So that's one of the things that I learned really early on, especially, like I said, with the professions, the real estate agents and the insurance agents. You'll get referrals from everybody and their stinking dog, because it's an ego boost to themselves to give that referral. What matters most is not the referral from the person that says, go with so-and-so, they saved me money. What matters most is to go with a referral from somebody who's done a bunch of deals, who's gone through a claim. So that would actually be what my recommendation would be. If you get the go with so-and-so, he saved me a bunch of money, you should reply back with, have you had a claim go through them?
Yeah.
Right? Wouldn't that be a good...
Well, one of the lines that I use right along those points is, every company is exactly the same until you file a claim. If you never file a claim, cost is the only thing that matters. It's when you file that claim, when you need help with something, when you need advice about a sticky situation, that's when you'll find out what you really have. If you never call the insurance company, if you never call your agent, if you forget who your agent is, for that matter, it doesn't matter what company you're with. Like we'll talk about it in point 2, the company, it's important, but only to a certain point. You gotta dig past that. And here's the thing, if you put in the work on the front end, if you do a little bit of due diligence and pick the right advisor, the right advocate, then you have earned the right to check out and go do your thing and forget about insurance, because you've got a solid advisor who's gonna say, hey, I'm about to tell you something you need to know. And they're gonna ping you. They're gonna send you an email. They're gonna call you when something happens that you need to know about.
And I think that was a really big realization for me in my career. Is obviously I've done a bunch of houses and I've gotten a bunch of different insurance policies with a bunch of different agents. And it took me a while to understand the benefit of having an agent, the benefit of having a person that knows your industry, that knows your business, that knows you personally, and cares enough to follow through with that and make sure that you are being taken care of for your needs. So this whole do your research ahead of time, we can't stress that enough. You got to know who it's coming from. You got to know who that referral is coming from, and what's in it for them, and what's their motivation for that referral. To be clear, I don't get any kind of kickback. As a matter of fact, I think that'd be illegal for me to get any kind of money from a policy that you get. It may not be, but I think it is.
Well, it's not illegal for you, but it's definitely illegal for me. So
just to be clear, there's no kind of relationship here where it's like, hey, I'm going to get something from sitting this person in front of you. That's not what's happening here. The reason why I have James here, the reason why I asked him on this episode of Grant Teach Me Something, is because the dude's a freaking engineer, and he knows how these policies work inside and out. And I've talked to a lot of, I was talking about at breakfast this morning, how it took me 5 years to find a realtor that made me understand why realtors get paid. I finally got, so Mary Lou Gonzalez, who you guys are going to be meeting, I'm going to be introducing her through some of this education stuff as time goes on. It finally took me to get to her before I was like, oh, that's why you get paid. Like, you're supposed to be really good at something, right? It was kind of similar with insurance agents. When you get through that just kind of run-of-the-mill, I work for XYZ big company, I don't really have anything in mind except for I need to make a quota. That's much different than having a personal relationship with somebody who cares, who is an agent, who in the truest of sense, right? Insurance agent should hold some weight to it.
It all comes back to 2 words, and this is part of my branding, so this is the terminology that I use, but it is 2 parts. The first is advisor. It's not a salesman. It is someone who is there to give you advice, someone who can articulate and identify the exact unique problems that you face in your business that is not generic to real estate investing as a whole, because as you know, your portfolio is unique. You have a lot of notes. You do a lot of seller finance. You're not the multifamily guy.
Right.
You know, the Jorge Abreu or the, you know, I'm trying to think of who else just off the top of my
Brad
head.
Sumrock's another big
Yeah, exactly.
multifamily guy.
Like, for instance, if I was talking to you about multifamily.
Abel Singh, I'll give a shout out to a
I was
fellow
about to
Propelio
do that for the self-storage, like, because he just got into that new partnership there, which is really exciting.
I like Abel a lot.
Man, he's a good guy. I like him. The advisor for your unique business, because so many people, unfortunately, the insurance industry is really low barrier to entry. Just about anybody can pass a licensing test and go get hired by XYZ company or brokerage and call themselves an insurance agent. That doesn't mean anything. It really doesn't. Right. It's almost as easy as being a real estate agent. You can have a license on your name. That doesn't mean anything, as a lot of our colleagues would say who are realtors and are true real estate professionals. There's a big difference between, oh, I'm an insurance agent and an insurance professional.
Right.
Yeah. So in the circle that we run in, there's 4 or 5 people I can think of off the top of my head that are really good at insurance. They give good advice. They care about the client. I'm certainly not the only one. Please don't think I'm naive enough to think that I'm the only good one out there. There's a handful of really good options, but
you're the only one that's this good looking, though.
Well, I mean, the point is, and why it's so important to equip yourself with this knowledge and to do the due diligence is, for every one great insurance agent or broker, I mean, there's literally hundreds that are either average or meh or bad.
Right. So knowledge, we talk about kind of vetting your insurance agent, but it kind of goes a little bit past that. So it's sort of like if I were to go and vet, so hang around till next week. You're going to see on next week's episode of Grant Teach Me Something, I'm going to have Paul O'Dwyer and Mike Powell here. And Paul has done cattle ranching and horse trading, and he's done hundreds of thousands of heads of cattle and horse and that kind of stuff. And so if he were to tell me, well, Grant, you just need to go vet I don't even know enough about your horse trading professional, I wouldn't know the first question to ask about that, right? So that becomes a challenge too, is when you have that barrier of entry to even have a baseline knowledge of the industry to know who's blowing smoke and is just a great salesman versus who really knows their stuff. So you do need to do a little bit more exploration. Now, we've got some tools for you. Now, on the Grant Teach Me Something playlist, if you go over there and look, you can, if you're on YouTube, you can click on the Propelio playlists here. I believe it's right below us, if I'm not mistaken. And click on that. I think it's episode 30 or 32. I do about an hour-long episode on insurance for Subject 2, specifically. That would be a good episode to watch to kind of get a baseline knowledge, real quick, easy answers to get from somebody to know if they're going to help you with your creative strategy. Insurance is going to be if they know like who should be the named insured and the also insured and the first or primary and secondary mortgagee, that kind of thing. Right after we get done filming this, James is nice enough to stick around. We are going to be filming an exclusive video for my students on creativecashflow.com that will go into great detail on the insurance needs of what you really need to know for a good insurance policy. So that would be another tool. If you're not already a member of creativecashflow.com, check it out. creativecashflow.com. We've got exclusive content on there. The primary module that I have on the Propelio Academy is also available on there. Anything free that I've got on other websites is going to be free behind on creativecashflow.com. But we do have exclusive content like with what James is going to be doing. And I do a weekly live Q&A every Monday night where I can help answer any questions that you may still have about that. One of the cool things that you guys have as being part of this community is that we are a community. We all work together. I really like James a lot because he hangs out in this community. He is on Facebook. You can approach him and reach out to him for questions. Now, be respectful of his time. I haven't talked to him about this. He hasn't asked me to, but we need to be respectful of anybody professional's time. This is a busy guy. If you've got a question, I'm sure he's happy to answer it, but understand that you need to work towards having a professional relationship with somebody if you're going to be asking for their answers and guidance and that kind of stuff too. So just out of respect for you, if you are going to reach out to him on Facebook, be working towards that professional relationship. Give him some business too, because he's pouring into the community with stuff like this. So knowing who you're dealing with is very important, but knowing how to ask the questions is also very important. So you got to have those tools of what to ask, and that's going to be what's offered in some of these other areas that we know. And then you just got done recording, and we don't have this up. It's probably not going to be up because this is gonna be filming probably before we get the videos up on the Propelio Academy. But propelio.com/academy, you just filmed a big module for us, didn't you?
Yeah, it was 13 episodes. It's basically a top-to-bottom insurance course.
It's amazing.
I started at basically, I don't know, what is insurance? I don't know what that is. Like literally, this is a deductible,
right?
Like on that level, and then we go from there all the way through multifamily and rentals and vacant and subject to. We didn't get too far into subject to because it's a rabbit hole for sure. But we got 13 modules on the Propelio Academy.
So check that out, propelio.com/academy. We've just done a big relaunch of that. I'm now the dean of the academy. I brought my team in. We redid the entire site, got it launched May 1st, and so we're getting everybody's content out there as quickly as we possibly can. His is going to be a great module for you to learn from. So we've got great knowledge available to you. So step one is knowledge. Know how to ask the questions, know who to ask the questions of, know what kind of answers you want, and know that referrals are typically just somebody wanting to feel good about the fact that they have somebody to refer. Look for what's happened in a claim. Look for how that customer service has happened. What is our step two?
Step two is look past the company name.
I like that. What does that mean to you?
Well, it's controversial for one thing because it flies in the face of literally tens of billions of dollars of marketing and brand awareness on a national level.
We should have had some like clickbaity, like what the insurance company doesn't want you to hear. Like
it's a secret they're trying to keep from you. No, it's part of this. I have to admit my bias because I came from one of those really big names. I spent 6 years there, and it took me almost 2 years of serving real estate investors to fully recognize how ill-equipped that company is to serve the needs of investors. When people see a name they recognize, when they the whole point of funny TV commercials is to get someone to have positive reinforcement with someone's brand image. When you see the Geico Gecko or Flo from Progressive or whatever celebrities on State Farm commercials this week, all of that is about brand name, brand name, brand name, brand name. And when it comes down to, you wanted to jump in there?
Oh, I was just going to say purely the fact that you were able to call upon those names shows the effectiveness of those marketing.
Billion-dollar ad campaigns. That being said, there's a huge disconnect between the buying process that all of us go through, because I buy insurance just like you do, and everybody watching this, if it's auto insurance, we're legally required to carry it, but if you have a brain between your ears and you're an investor, you're going to be buying insurance. The buying process is so disconnected from the advertising that people are programmed to think about cost and cost alone. You can't turn on the radio, you can't turn on the TV or read a newspaper or a magazine or go on social media without seeing 14 insurance advertisements. And what do 98% of them talk about first?
The price.
The price, which we're going to get to in point 3. So much advertising is settled on price. And like we said just a few minutes ago, if you never file a claim, then every insurance company is exactly the same. The unfortunate thing is you don't get to pull out your crystal ball on the front end and ask the crystal ball, now, when I choose this insurance company, will my claim get paid fast? Will it be paid at a fair amount? Will it be a royal hassle? Am I going to have to go through 73 emails to get the job done? To go back to point 1, the company is kind of important, but the agent, the broker, your personal advocate and advisor, that is way more important than the company, because here's the thing. A good company can be made mediocre or poor with a non-present or an apathetic agent. And even a mediocre or average company can be made stellar with a great agent or broker, someone who is attentive, someone who's on top of things, who calls when they say they're going to call, who gives great advice, who is going to get on the phone with the claims adjuster and raise 4 kinds of hell to make sure that your outcome is positive. too many people pay way too much attention to the name on the company. And here's something that you can do, because a lot of the people that watch these videos are wonks. They like crunching numbers. They like looking at the data. There is a credit bureau on a national scale called AM Best, and S&P is another one, Standard & Poor's, and then Moody's is a third one. But AM Best is a rating bureau for a lot of different industries. One of them is the insurance industry, and they have rankings of financial stability, financial health on a company-by-company basis. Without boring you to tears with too many of the details, when someone says A-rated, I represent 52 A-rated companies. What does that mean exactly? Well, what they're telling you is the companies that they represent are rated A or better by AM Best, which tells you the financial stability, the solvency, and a ratio of liabilities to assets. It's a literal ratio of money in the bank. Without boring you too much, it's called surplus. When an insurance company takes in your premium, they pay their operating expenses, they pay claims, they do all of their management, they take some for their profit, and then everything that's left over, they put in a giant bucket called surplus. And that bucket is what gets them a lot more authority and power with AM Best. That's what increases their rating, their solvency.
So should we be looking at AM Best for these A-rated things with the company name?
And that's the thing, yeah. If you are getting recommendation for a company, and if it's somebody that you've heard of 1,000 times, there's really no reason to look them up, because obviously they have a lot of money in the bank. It's for people like me, for brokers, I represent more than 200 companies. I don't even know how many carriers I represent right now, because we're constantly adding more.
Well, and that's one of the things that people need to understand, is that the company that you're dealing with is actually being underwritten by somebody else, usually, right? Like you're dealing with a front facer who has done their job to find people who give good policies, and they're kind of playing that middleman for you, right?
And they're taking their spiff, 1, 2, 3% of whatever it is that you buy from the carrier. The thing that's really important and where the ratings come into play is if your broker, if your agent, if you've gone through the due diligence like we talked about in step 1, and you've selected a good advocate, a good advisor, they may very well recommend a company that you're not familiar with. That's when it becomes really important to be familiar with the old keyboard in Google and just type in whatever the company name is, AM Best.
So that's like A, M as in Mary?
A as in Alpha, M as in Mary, Best, B-E-S-T. And
that's a good tip.
Yeah. And if you type in Google that company name with AM Best, most State Department of Insurances carry a real brief summary page where it will tell you everything you need to know. This Texas Department of Insurance is great about this. Every single company that does business in Texas is probably on that page. And it'll tell you right there their mailing address, their phone number, their fax number, their complaint line or whatever, and it will tell you their AM Best ranking.
Well, that's a great tip. So, because that's one of the things too, is like my best insurance agents that I've worked with were not State Farm. We're not Geico, right? And that's not to say I've got one actual State Farm guy that I've really enjoyed working with. So the inverse is also true. Don't discount a big company just because it's a big company, right? But don't overly weight that big company. Sometimes the smaller guy is going to be somebody that can really help you out, but you should look up their AM Best rating to kind of see where they're at on that, right?
Yeah, and one of the other pieces, if I could throw something in there, we've all heard of J.D. Power and Associates, the customer satisfaction rankings. That is part of it. A lot of people give too much credence to that because, as we all know, the people that are most likely to fill out surveys are the ones that are pissed about something, right? People aren't as likely to share the good things. So those are somewhat relevant, but they don't do them for real estate investors. It's always homeowners and auto and small business, which nobody watching this is going to be considered in the small business category for J.D. Power. So take that as a grain of salt. A lot of those companies offer dwelling fire policies, so they have stuff that does serve at least some part of the real estate investor market.
Can I do a side note for us?
Sure.
Completely not in our 3 steps, but this is a real life scenario. You said dwelling and fire. One of my students, his second deal got arsoned.
Oh my God.
Fired out, right?
Wow.
So he's in the middle of that claims process.
Wow.
I don't want to draw us out too far, but I think this is an interesting thing to know. Like, what happens? I've never had to deal with a fire policy. So he did get from them that it's a total loss, right? My understanding, I want to run this by you and then see how that is, because hey, hopefully I'll never have to deal with this, but I've bought burnouts before, right? I've bought houses that were burnt, bought it from the homeowner, and then I put my money into it and fixed it up and sold it. My understanding was that the homeowner got their total payout, which they could choose to fix up the house, right? And then like I've bought the house from them and they essentially got money from that. Does the is that a misunderstanding? How does that insurance work? Is he going to get a big check only if everything gets fixed up, or does he get a big check and then he gets to decide what to do with his asset?
Unfortunately, I've been through this on the agent side, and it is a misunderstanding to an extent. Depending on what point in the deal you came, it sounds like you came in rather early. When you have a total loss, there's always going to be, well, let me pause a second. I shouldn't say always, because it's never always in the insurance world.
We know in the real estate world.
No, it's never always, and it's never
depends.
never. It's, yeah, I shouldn't even use that word. It shouldn't be in vocabulary. Assuming that the policy had replacement cost coverage on the dwelling, which okay, there you go. You can break it down and have it be on the dwelling or on the contents. Most of the time, you're going to have it on the dwelling if it's a dwelling fire policy.
It was a builder's risk, actually.
Okay, so it was in the middle of a rehab when that happened. Yeah, that happens a lot more than you would think, believe it or not. A replacement cost policy, when it comes to claim time, is in 2 stages. You're going to get the actual cash value check regardless of what you choose to do. You're going to get that one pretty quickly in most cases. When I dealt with the tornado in Rowlett and Garland the day after Christmas in 2015, there was a lot of total losses in a couple of neighborhoods in Rowlett. One of my clients was a total loss. I got to see firsthand. Class was in session for me during that experience because I'd never had a total loss before. I learned a lot from that. You got the first check very quickly after the loss. I got, to brag a little bit here, but my client was the first total loss check that any insurance company issued, because we were on the phone literally 6 a.m. after the morning after the tornado. It hit at like 8 p.m. on a Saturday. I was on the phone 6 a.m. on Sunday getting the ball turning, because I knew as soon as everybody got up on Sunday morning, they were going to be calling their insurance people, and it was going to get slowed down dramatically. So the actual cash value check got cut immediately. And then
recoverable depreciation.
Recoverable depreciation. You knew exactly where I was going to go. Do you want to get licensed for insurance? So what happens then is the carrier will come to you and basically say, so what do you want to do? Do you want to rebuild on this site? In which case, here's a check for whatever you need to make that happen. They'll cut disbursements so you can pay contractors or whatever. They won't give you the whole thing. They will say, do you want to surrender the property to us, and we'll give you a market value and an adjustment for the part that you lost that you haven't rebuilt. And then you also have the opportunity to say, no, I'm not going to rebuild it. Give me the actual cash value check, which you probably already have by that point. I'm going to surrender the rest of it. I'm not going to rebuild it. I'm going to sell it to someone else. I'm going to sell it to Grant Kemp. If you want to rebuild it, that's when you get the full rest of the money, and they will hold it for you until you present them proof that you rebuilt it. And that's only in the last 20 years or so. Insurance fraud in the 80s and 90s was rampant to an excruciating degree. Like looking back and I'm like, how did you guys do that? How did anyone make any money? Because they'd be like, yeah, I rebuilt my house. Give me my check. And it was like,
they just get it.
No, people were making a huge profit off the insurance industry, which is why homeowners rates in that day and age were just like all day long, because insurance fraud was stupid. So to your point, in order to get the full check in the event of a total loss or even a major loss, if there's significant loss where the mortgagee gets involved, or the mortgagee's sitting there going, our collateral's at stake, so we're going to pay close attention to this one, that's when it gets a little bit sticky on replacement cost checks.
So if they get the initial check-in, and I swear we'll go back to, but I think this is an interesting topic for you guys too, right? If they get the initial check-in, the actual cost, right? Actual
cash value.
Actual cash value. They're going to get that check. Doesn't matter what they owe. It's just they get that check, right, for the actual cash value. It's only if they choose to go forward with the rehab that they will get the recoverable depreciation check coming in. And if they choose to sell it now and that check for actual cash value gives them a little bit of profit, then they can kind of profit twice on it, basically, right?
And this, of course, is making the assumption that there's not a mortgagee in position on the policy. Because if it's a total loss, the mortgagee gets paid first.
Right.
And then you get paid with whatever's left over.
Well, thanks for answering that. It's an interesting but crappy situation, but now I will be able to report back to them. Okay, so guys, if you like what you're seeing here, Propelio is the reason. Propelio is the reason why we are able to sit in front of you and give you this great content. Guys, such an amazing community has been built out that you're a part of. And I implore you almost every week, I want you to get involved in that, whether that's through Facebook groups, whether that's direct messaging somebody who might have a benefit from this, whether that is just helping us out by liking the video and subscribing to the channel. I mean, that you hear all the YouTubers like and subscribe, like and subscribe. I don't know if you understand, but that really helps our rankings behind the scenes. That's what these guys want to see, the YouTubes and the Facebooks and all that kind of stuff. Want to see that you care. So if you care, as simple as jamming on that like button, putting some comments out there, putting the subscribe button, that's going to help them spread this message to more people, and that helps us because we've put a lot of time and effort into making sure that this community is built up there. So if you like what's going on, please like, subscribe, all that kind of stuff, and check out Propelio. Propelio.com is an amazing piece of software for your comps, for your CRM needs, for websites, for leads, soon to have some driving for dollars stuff that's going to be really killer. I mean, you've just got a lot to offer there. So reward them for the efforts that they're doing by bringing people like me and James in front of you to help build this community out.
Yeah.
So let's jump back in. So we've got our 3 steps to getting your insurance, getting properly insured, right? The sexiest title of all times. Our step 1 was knowledge and power, or knowledge is power. Our step 2 is go past the company name. Don't worry so much about if it is a big name or is not a big name. Look into the company, see what's going on. And third is dissect the dollar. And I think that that's a really important one too, because you mentioned earlier, one of the big referrals that you get is go to so-and-so because he saved me money. Well, did he save you money when you bought the policy, or did he save you money by having an excellent service on a claim that you needed to take, right? And I think that you fall under a really good category in that you are very minded. I mean, you deal solely with investors and business people. So you deal with all the cheapest of skates. So you know that you're serving that need, but you have a really big desire to make sure that even within that policy price, they're being properly insured. So that's what we're saying by dissect the dollar. Look at the dollar, but what does that dollar represent, right?
Well, and really the way that I approach the whole conversation, I use exactly this terminology when I'm talking to my prospective clients, is when we talk about money, when we talk about saving money, which is the most overused phrase probably in the whole world, I'm always in this dual process kind of mindset where in my mind there's small money and there's big money. Small money is how much premium am I paying for this policy? How much is it a month, 6 months, a year, whatever? You know, that might be $100 here, $100 there, maybe 1,000 or 2, maybe 10 or 20 or 30 if you got a multifamily. And I work with apartment complexes and literally any kind of investment property. So it could be 500, it could be 50,000, who knows? But in the grand scheme of things, that's small money, because if worst case, you're out a few $100s, maybe a couple $1,000s in difference in delta between what you did pay and what you could have paid. The other side of the coin, and what I'm way more aware of and mindful of when I'm giving people advice, is the big money. It's the value of the asset itself. What is this property worth? What is the cash flow in this property worth? If something happens to this property, this asset, and you don't get it paid for the way that you want it to be, what's going to happen to you? What's going to happen to your business? The big money is what I'm way concerned about. Too many people, when they're making an insurance buying decision, are more concerned with the small money when they should be mindful of the big money too.
Yeah, and that's and you used a couple of words that triggered a phrase in my mind, that cost only matters in the absence of value.
You know it.
Right?
Absolutely. Man.
So you've got to figure out what it is that you need out of that, and really prevent yourself from making decisions based off of the small money. The big guys, that's not how they make their decisions. You've got to protect yourself properly, right? So it is a matter of making sure that you're not wasting money, but that's what we mean by cost only matters in the absence of value. It's not a waste of an extra $100 if you know that your claim is going to be taken care of and you know that it's going to be paid out the way that it needs to be paid out. Whereas you can go, and I can't think of any of the names, probably would be best for me not to name them even if I could, but there's some of these insurance places that you go, that you see advertised in the middle of the day on TV that like, they're like, get this so that you can show that you're insured, right? Like they're never going to pay anything. The reason that they're able to make money and make it cheap for you is because they're not going to pay out. And you kind of know that when you're getting into it, right? But that's not, you're going to lose tons of potential income by cheaping out on something fairly minor.
And really, this is where it comes down to, again, having a great advisor and a great advocate who you can bounce ideas and questions off of. Because when you're trying to decide how you're going to go about saving your money, it's not a question of which policy do I need. A lot of times, it's a question of what are my preferences? What are my priorities? Where do I want to spend my money? And engaging in risk management, active risk management, going, okay, let's talk about deductible for a second. This property is $150,000. If we do a 1% roof deductible, my at-risk capital is $1,500. If we do a 2%, $3,000, 3%, $4,500. How much risk am I willing to accept on this property? In DFW, spoiler alert, you don't need to have a really high roof deductible because then you pay the stupid tax when hail season comes around. I will tell you that the most likely claims are wind, hail, and water, whether it's appliance failure or a burst pipe or something in the foundation shifts and a pipe cracks. More than 90% of property claims in DFW are either wind, hail, or water. Everything outside of that, whether it's theft or vandalism or fire or smoke, falling objects, frozen pipes, etc., all of them amount to roughly 10 or 15% of every property claim filed in DFW. So if you're going to skimp somewhere, don't skimp on your roof deductible and don't skimp on your water coverage because you're about 90% likely to file a claim in one of those two areas. That's
really good to know. That is definitely good to know. James, how can people get a hold of you if they want to work with you? And again, I want to be clear, I don't get any kind of referrals here. I'm just putting somebody in front of you that knows what the heck they're talking about, right? So how does somebody get in hold of you?
The easiest thing, and I have put so much effort into our website to be user-friendly. We have a lot of automation and a lot of technology that we leverage behind the scenes to be really fast and really efficient with our communication. Awesome. The website is a great place to start. It's just JJAIRM.com. It's short for James Jenkins and Associates Insurance and Risk Management, but that was too long of a URL, so we broke it down in JJAIRM.com.
Nice. Very cool. If you are watching this or listening to this, I should say, as the podcast, always like to remind you, we love questions. You can tag us in the comment section, but if you're listening to this, go to the description of the podcast. There's going to be a link to the actual YouTube video there where you can post your questions. We like to keep a monitor of this and get back to you because there are going to be questions, and sometimes you need to reach out. So we love being here for you guys. Stay tuned. Next week, we're going to have another really great guest here. Like I mentioned, we've got Paulo Dwyer and Mike Powell going to be here to help talk about how to avoid servicing nightmares, because that can be something, similarly, we don't talk so much about the non-sexy behind the scenes things because people are more interested in the sexy stuff. But guess what? When you're actually doing this, there's a lot of ways you can lose money without realizing it. One of those ways is by screwing yourself into a bad lawsuit and having some bad liabilities, and servicing is really easy to get yourself caught up in that. So come back next week to learn more about that. James, do you have anything that you want to say as we wrap up?
No, I mean, other than I appreciate the opportunity to come down here. I would just second the Propelio thing. I'm not getting any kickbacks from them either, but I have seen a couple of guys in Ryan and Daniel that truly care. That's how they feed their family, but that's their passion project.
Yeah.
And they are all the way in on serving the needs from the rookie, I don't know anything investor, all the way up to guys like you and your colleagues who are operating at a very high level.
Right.
So I would just say check them out at propelio.com.
And to that point, I mean, Daniel sent me somebody yesterday. Today's the auction in Texas, and there was a viewer that watches the show that had a lead that needed to get closed. He sent it to me yesterday morning, stressed it about 600 times on the phone. He was like, I don't care. I don't need anything from this. I just need to see this guy win, right? And I love that about him. He's like, I don't want any kind of, go make the deal happen. I don't need anything from it. I just need this guy to win. I want our viewers to win. And those are behind the scenes conversations that I'm having. Now, fortunately, we worked with Brittany Washington, who really blew me away. We got it pulled from the auction. I just got the notice from it this morning. We got it pulled from auction. We got a deal, 71 cents, and I'm helping somebody buy a house. That's a viewer. So if you are watching this and you want some help closing out deals, for the longest time I refused to buy deals with anybody because I didn't want anybody to get the false impression that the only reason I was doing education was to kind of funnel people in to help me buy houses. But then I realized it will actually help you build your portfolio if I do step in and help do that, and it helps me build my portfolio, so it's good for both of us. So I am starting to JV with those people, and those of you who need that help getting across the finish line, just like we did with Ace this morning. And so if that's you, reach out to me as well. Guys, thank you so much for being here. We love every minute we get to spend with you. Again, I can't stress enough, help build the community. Go use this information for the greater good. Spread this information, help other people get where they need to go, and we will see you next week.
All right. Sounds good, man. Thanks for having me.
All right. You're welcome. Thanks for being here.
Well, that was just an awkward way to end it. I was about to say, like, Google review stuff, but I couldn't get in fast enough. I didn't want to mess with your ending there.
Oh, okay. All right. Well, we'll trail out.
We're good. Are we not already going?
No. Buy more houses. Here's Dar and his wife after only 2 weeks of being my mentor student. And here's Brady after paying attention to all our online videos and attending all the live Q&As. You want to buy more houses? 3 steps. Sign up at creativecashflow.com/memberships, watch all the videos, attend the live Q&As, and then send me a photo with you and your sweet, sweet new contracts. creativecashflow.com, helping you buy more houses for one low price of only